Your nonprofit dollars, a CPA's perspective. Hey there, today we're unraveling a topic that often dances on the minds of nonprofit leaders, your money. As someone who delves into financial matters in the nonprofit world, I'm here to provide clarity on this topic that's both insightful and practical. In essence, a nonprofit can have surplus funds at the end of the year, but it's essential to approach this in a way that aligns with the organization's mission and financial health. So let's get right into it. We're going to start with responsible stewardship. Having a surplus at year end reflects prudent financial management, but it's crucial to ensure that these funds are used to further the nonprofit's mission. There are usually three main expenses that a nonprofit should have. So that'll be program, fundraising, and administrative. Program costs are usually the main costs of the organization. They're associated with delivering the services, programs, and mission, whether it's running educational programs, providing healthcare services, or supporting artistic endeavors. Program expenses should be a significant portion of the budget. Now, while program expenses are crucial, very important, administrative costs are also necessary for effective operations. This includes salaries for staff, rent, office space, utilities, and other administrative essentials. However, nonprofits should strive to keep administrative costs reasonable and efficient. And there's one more other cost, fundraising costs. Fundraising costs is essential for fundraising the funds to carry out the organization's mission. These are costs associated with fundraising, such as marketing campaigns, event expenses. They are legitimate expenses needed for a nonprofit. However, transparency in fundraising activities is key to maintaining donor trust. Now, there's also two main categories of funding, and that would be restricted and unrestricted funds. Now, nonprofits often have different categories of funds, including restricted and unrestricted. Balancing these funds ensures that the organizations remain financially stable while fulfilling its commitment. Now, I know what you're wondering. What's the difference between restricted versus unrestricted funds? Unrestricted funds are funds you can use to do whatever you want within the mission of this nonprofit, while restricted funds really come with more donor-imposed conditions that must be used for specific purposes. So for example, let's say you have a nonprofit and your nonprofit is a healthcare nonprofit to help people in the community have access to good healthcare. A restricted fund may be like, for example, okay, you can only use these funds to pay for prescription drugs. So then it's restricted for only that. So you can't really use the funds maybe to get a physical or for vaccines or really anything else, or gym memberships. You really need to use those funds specifically for prescription drugs. Now, the good thing about that's restricted funds. Now, unrestricted funds, the good thing about those is they have a lot more flexibility in what you can do with it. While you should make sure what you do with those funds support the mission and the vision of the organization. So you really need to make sure classification is important, because you want to make sure the restricted funds are used in the exact way that the donor imposed those funds to be used. Also, it is important to keep track of the income over expenses. It's important to know whether you have a surplus or a deficit. And if you do have a surplus, it is okay to build reserves. So a year-end surplus should be considered in the context of the long-term goals and strategic plan. It could be used for program expansion, building reserves, or addressing future challenges. Many nonprofits aim to build reserves to cover unexpected expenses, economic downturns, or just invest in future projects. However, these reserves should be responsible and justifiable based on the organization's needs and financial situation. Therefore, they can retain excess revenue. Also, as long as it's directed towards advancing. Now, while nonprofits can keep excess revenue, it's important to make sure that it's not excessive. Excessive accumulation that isn't aligned with the mission can really, hurt the nonprofit, hurt the way donors see the nonprofit or potential funding they can get in the future. The nonprofit really should strike a balance between financial stability and mission fulfillment. Nonprofits might set aside, a surplus as a reserve or a safeguard against future uncertainties, but it's just to make sure that that amount is used for a safety net and it has a specific goal, and you know what the funds are for, not just saving funds just for the purpose of saving funds. They should be a part of the strategic plan and the strategic goals. The positions the organization have to navigate. Like the changes in funding. You may have the funds to the side just in case you lose funding or don't have a good year as other years. Economic shifts, planning for potential downturns, recessions, or even unexpected expenses. Let's say you own the building of your nonprofit and the boiler goes out, or you need to help the foundation or fix the roof. It's okay to have funding or funds on the side for that. It's just when a nonprofit makes money beyond its operational needs, it is considered a surplus, and this surplus should be used effectively. So one thing it is to keep in mind is that it's important to note that there's no fixed amount that a nonprofit organization can have in a bank. It's really dependent on a bunch of considerations, your strategic plan, how you plan to use those funds, So what the optimal bank balance for a nonprofit is really just depends on your organization. But one thing you want to keep in mind is with this money in the nonprofit is your mission and activities. The scale and scope of nonprofits' activities play a role in determining how much funding is needed to support its programs and initiatives. The primary responsibility of a nonprofit organization is to enhance its mission. Every financial decision should align with the mission of the organization and the best interest of the community that it deserves. The primary purpose of nonprofits is to fulfill its charitable mission. This means that most of its resources, including the funds and money received, should be directed towards those activities that directly advance that mission. It's about making a positive impact towards the cause and the community that you serve, rather than pocketing surpluses. So that's the one thing to just really keep in mind. And another thing you should keep in mind when it comes to your mission and activities is regulations, legal and ethical boundaries. Nonprofits need to ensure compliance with regulations governing their tax-exempt status, including maintain a charitable purpose and avoiding excess private benefit. To maintain their nonprofit or tax-exempt status, nonprofits must demonstrate that their activities are primarily focused on their mission. This includes using their financial resources to advance their charitable work and provide public benefits. Nonprofits are subject to regulations that dictate how funds can be used. Misusing funds, such as for personal gain, is not only unethical, but can lead to legal consequences. Also, losing your nonprofit or 501c3 status. Nonprofits must ensure they use surplus funds in alignment with their mission and in compliance with the legal and regulatory requirements. A nonprofit does not have to do this alone. They have the board to help. So I would say use your board as a way to help you stay in compliance. Another thing that can help you stay in compliance is having a CPA. A CPA like myself who can help you stay in compliance, who can read the guarantee contracts to make sure you're doing what you're supposed to do, who knows the rules and regulations that the IRS puts out, who knows what returns you have to file, whether it's a 990, a 990EZ, or just a 990 postcard. So really having oversight and having the right team is really important on what you do with your money and staying within those boundaries. Now, another thing I want you to keep in mind when it comes to the funds and the money and what you can and can't do with your money is public perception and with how you uses your finances. So think of public perception and financial management as a lighthouse that shines on nonprofit transparencies. Nonprofits are accountable to the communities and they're accountable to their supporters and the public. That's why many nonprofits are considered public charities. Transparent financial management, including responsible retention of funds, foster trust and maintains the organization credibility. Nonprofits are accountable to their donors, the community, and regulatory authorities. So transparency is key. There should be no secrets of the nonprofit. Everything should be transparent and open to the public. It's good for your nonprofits in many ways, and in one way, it causes trust within the community, which makes other people and organizations and funders more likely to want to give your nonprofit money if they know what they're going to do with it. If your nonprofit is transparent and they really have trust in it, So transparent financial reporting ensures that stakeholders can see how the funds are used. Transparent reporting to donors and stakeholders builds trust and that accountability, so your nonprofit can continue to grow, continue to fulfill its mission, and continue to help more people. So just a little recap of the things I talked about your nonprofit and money. The first thing was responsible stewardship is how you spend your money. There are really three main types of expenses. Program expenses, which directly go to the mission and what you do with your organization. Administrative expenses, which are really like the backbone and help support the organization, and fundraising expenses. Expenses used to help you bring more funds into your organization. And when you get the funds, there are really two different kind of funding categories. So they're either restricted or unrestricted. So unrestricted, you can use it in any way you want as long as it's a part of your mission and the vision of the nonprofit. Restricted funds usually have donor imposed restrictions. So you have to use it specifically for what you need to use it for. Now, is it okay to have money at year end? Yes, it is okay to have a year end surplus and to build reserves. You just have to make sure you're transparent and doing it with a purpose and not hoarding or saving money just for the sake of saving money. It should be a part of your strategic plan or goals, or something to have in case of a rainy day or emergency. Now, another thing I went over was IRS regulations and charitable spending, legal and ethical boundaries. So really, when you do it, you should have a good team to make sure you're staying within the boundaries of what the grant contract says you shouldn't do, what the IRS regulations say you shouldn't do. And a great person to really help you with that will be someone like me, like a CPA, who specializes in nonprofits, who knows grant management, who knows the legal and ethical boundaries, who knows what the IRS requires. And another thing is public perception. You really, really, really want to keep your nonprofit as transparent as possible so people can really understand and really have trust in your organization. So in conclusion, there you have it, my fellow financial explorers. That was just really a glimpse into the boundaries and possibilities of nonprofits' finances. Remember, while nonprofits have flexibility in how they use their funds and managing their funds, they should make sure it always aligns with their mission and vision and within the boundaries of the law, of course. A healthy bank balance is important to meet ongoing operation expenses, such as staff salaries, rent, utilities, or even being able to help the community and various programs to keep those running. But keep in mind that nonprofit financial freedom and what you do with your funds come with great responsibility. Also, you want to know more information about things you can or cannot do to manage your nonprofit? Check the link in my bio to access my free ebook, 8 Financial Mistakes Nonprofits Make That Jeopardize Their Tax-Exempt Status and Funding. Thank you.